20 minutes from the start of trading, so let's have a look at the technicals. And this is how it's looking. A break below 7,000 was something that technical analysts had feared, but hey, here we are at just above 69.66. So the new range, they say, will be between 6,900 and 7,000, though it is unlikely to recoup all its losses from Thursday as the net foreign selling's gone on for 40 straight days and hasn't stopped just yet. As for the Philippine peso, even as the foreign selling's gone on, the local currency's barely moved at the 53 to the dollar handle and is looking to kick off at 53.80 to the dollar. So where do we begin on the PSEI? That's going to be at just above 69.66. So let's get straight to the action at the Philippine Stock Exchange and speak with Michelle Long for a preview. So how are we looking, Mimi?
Good morning, Kathy. Well, Philippine shares are actually starting the day at 69.66. We were down 2.2% yesterday. Our worst day, the biggest one-day drop since May. The index, of course, suffering another heavy sell down yesterday. That's on the back of net foreign selling to the tune of 1.1 billion pesos. That is the biggest net foreign outflows for the index in about 6 weeks. Value turnover yesterday, 5 billion pesos. Joining us now to give us his take on the markets, Mr. Phillip Hagedorn, Chief Investment Officer of ATR Asset Management.
Back,
Good morning, Phillip.
Good morning, Kathy. Morning, Mimi.
So what's happening to this market? You're saying this is more sentiment versus fundamental. Tell us about that dynamic.
Well, I think, yeah, I mean, obviously this year it's been a very challenging year, I'd have to say, for the market. I mean, we were at 9,000 in January, and today we find ourselves holding on to 7,000. And I think the main reason for the drop has been surprises on the economic front. I mean, and that's primarily the inflation situation we've been dealing with. I think that's still the major overhang from a local investor point of view, that we want to see that number start to ease, and the expectation is over the next couple of months that we will see that number start to move down. I think the BSP is looking at 4.5% for next year. We think it's going to be higher, but I think the Philippines, if we continue to grow at 6% or above, that an inflation rate of 4 to 5% is very manageable. So I think for the sentiment to change, because the fundamentals, I believe, continue to be quite robust from a growth standpoint, GDP, from an earnings standpoint. There are some rough spots, but generally earnings growth is close to what we expected it to be, which is around 10% for this year. So the sentiment needs to change, and I think inflation, easing of inflation is the number one thing that will allow for the sentiment to turn a bit more positive.
So do you actually think Santa Claus will be coming to town this year?
Santa Claus always comes. I hope he just brings bigger gifts this year for the market.
The foreign sentiment, you've made a mention there of the local investor view, but what about the foreign investors? 40 days of net foreign selling. I mean, what's going to get them coming back and make that comparative analysis with the ASEAN markets if we're that attractive at all?
Yeah, well, I think foreign is a couple of things. One was the currency and the way the currency was moving this year. And I think, again, when you see a bit of stability in the currency, the foreign investors, I think, will gain some confidence in that. You know, we like to talk about cowbells. Cowbells are the cows that kind of lead the herd. And I believe the recent transaction of KKR buying into Voyager of PLDT is a bit of a cowbell for foreign investors. He's a savvy investor, never made an investment in the Philippines, and negotiated quite a while for this transaction. And he pulled the trigger when the peso was at 54. To me, that's a signal. That's not noise. That's real money coming in and investing, and somebody taking a bet that the currency risk at these levels has been reduced significantly. Having said that, we still feel the peso will come under pressure for a couple of more years, I think, on the back of our build, and current account deficit. So, but I think the big move is done. We have to get used to 54 as our new level. Is the range 54 to 56? That's likely for the next couple of years, but I think that big move is done. We were at 48 a year ago, 46 2 years ago, 42 3 years ago. So that's hurt foreign investors. the index is flat and you've lost 20% of your currency. So that's a tough market to be in.
So what are you now advising clients as 2019 approaches? Any changes to the asset allocation you're recommending among stocks, bonds, currencies?
Well, we're still on a global scale. We're positive on global equities, primarily U.S. still. On the local front, I think we're more neutral now on Philippine equities, but we think there's value here. Philippine fixed income, we've started to move out into the curve. We've been averaging, our duration's been averaging 1.5 years, very, very short, but we're closer to 3 years now. There's some good value there. I think you can buy a 1-year note at 5.3%. You can buy 5 years at 7%. You know, those are pretty good rates. Those are rates we haven't seen in a long, long time. So moving out, extending duration a little bit is our strategy on fixed income now.
Philip, very quickly, I just wanted to get your take on the telco race. We did have Now Corp join us yesterday on the show. What do you make of the current names that you're seeing vying to become the third major telco player?
Yeah, well, I mean, I think the bottom line is you're going to need deep, deep, deep pockets to be a third player. And, you know, you're going to need expertise and experience. And that's why I think it's important that that foreign player is significant and that the issue of allowing 100% ownership is a must, because I don't see a local player, whether it's the Villar Group or Now, with the pockets deep enough to endure the pain that they're going to have to go through to be a competitor. The amount of money that's projected to be spent to make an impact is in the billions and billions of pesos. And you know, you really need deep pockets to survive in that game.
Okay, thank you, Philip. We'll talk to you again at the opening bell. In the meantime, Kathy, very quick corporate story. Cemex Philippines posting a net loss of 70 million pesos, a reversal of the 202 million they posted in the same period last year. This despite an 8% rise in sales or revenues, the company citing high input cost inflation for that. The details later on. In the meantime, at the foreign exchange market, the peso opening stronger, 53.75 against the US dollar from yesterday's close of 53.80. Kathy?
All right, back to you both in 14 minutes for the opening bell.